All right, thank you, Joel. Can you guys hear me? Is that coming through okay? All right, well, it really is an honor to come back. I always told these guys when I was in grad school, I am a Red Raider sports fan to death, and we really suck at football this year, but luckily we've got a basketball program, so we're kind of turning into the KU of the Big 12, unfortunately. But, you know, I as much as I love my time in Lubbock, I developed as many relationships from the experiences and the training that I got here at K-State. So it's great it's really humbling to be able to come back, spend the time with you guys this afternoon as I see all the people that have helped me throughout my short career. So I hope to continue to maintain and grow those relationships with you guys in the future. So when the professors had approached me about this topic back in July, I really tried to put some time and effort into figuring out what I wanted to do, what I wanted to spend my time talking about. I gave a talk a couple of years ago at the Layman Conference, really describing some of the challenges of implementation of a nutrition program in a large system, but I wanted to spend some more time on this presentation on the front side topic of decision making and how we evaluate and decide to do what we do within an integrated system. So just to give a quick background of our live operations group, so we operate today in 5 states. We employ just over 2,500 employees on the live operations side of the business. We're present in Oklahoma, Kansas, Colorado, Texas, and Iowa. We actually break it down into seven distinct regional cells of production, and we today, depending on inventories, run somewhere around 340,000 sows. We operate in 1.2 million nursery spaces and about 3.4 million finishing spaces. Really, our ultimate goal from the live operations side is to supply our commitment of pigs to the 2 packing plants that we market animals to. Our Guymon plant, the original Seaboard plant, where we supply about 85% of the harvest, which is about 100,000 pigs a week, and the newly created STF plant in Sioux City, Iowa, where we provide about, now that they're double shifted and up to capacity, about 40,000 head a week, which is roughly 1/3 of their harvest. So the one thing I wanted to talk about is when we discuss kind of our live operations, we really break it down into the 2 very distinct regions of our Western Plains production, which is everything from Colorado to Texas, and what we have in Iowa. And we do that because they are 2 very different business models. You look at Guymon by itself, most of our facilities are company-owned. They were built and operated by Seaboard. And really the intentional growth that we've had in the area has been through our own construction and our own expansion. It hasn't been facilitated by contract growers or independent producers. Versus Iowa, where, again, we kind of have a complete 180, where 80% of our growing spaces are contract growers. And we've been able to grow into that region through acquisition, through other swine producers. And really, when we break it down, we look at Guymon as a very resource-scarce region of production. Okay, labor is very short. Our feed mills, we push to capacity. A lot of times, if we talk about adding spaces or adding pigs, one of the constraints we have is how are we going to feed them? There's not a lot of toll milling options where we're located. Prestige has a feed mill that we could actually pull some feed out of if we needed to, but a very resource-scarce area, so we have to manage it differently than what we do in Iowa, where we have toll milling capabilities and availabilities and where we can work or put together more contract options if we need additional growing spaces. So what most people think about when we start discussing what drives an integrated system is really the difference in end value of our marketed products. And I put together just a brief graph it's got the USDA reported pork cutout price, which would be represented by the blue line, since roughly the beginning of 2013 through about 2 weeks ago, and then also the associated daily hog price reported through the same time period. And, if you think about it from a live producer standpoint, we focus a lot of attention and effort on the orange line. As an integrated system, we can move and focus our attention on the pork cutout or the full value of that pork carcass. And typically where we start to run into a lot of discrepancies are these periods where we start to see big gaps from our daily hog price relative to our actual pork cutout value, right? And everybody in here knows from a live production side, we invest 2/3 of the cost of raising that pig and take a lot more of the risk, but sometimes processors don't share those profits back to the producer. And it really, you think about it, it comes back to supply and demand. When processors have plenty of hogs in the marketplace, they're typically going to offer lower money or lower value for them versus when pig supplies are tight. If you think back to the PED period in 2014, some of the most, the highest prices in history, a lot of that got passed on to the live producer because there was a shortage of hog supply, right? So they were able to pass that on to the live producer, but you can see some of these larger stretches at the end of 16 and early 17 when hog supplies were high and we actually had more hogs than we had processing capacity. So with that in mind, really the biggest thing that we can do as an integrated producer in looking at what makes us profitable is we can work to exploit that integration to not only control the cost of raising the pig, but then also the value that we can generate from a revenue standpoint on the carcass coming out of the plant. So, and there's times as an integrated system where we know we're going to make money on the plant side, even though we may be losing money on the live side. But as an integrated system, we roll that up and look at total profitability throughout the system. The other thing that we do differently than most is that we actually take that value and we try to put it back on a fixed asset, which for us is actually the shackle spaces at the plant that we're trying to fill every day and throughout the year. So it moves our target of not only are we looking at a per pig cost, but we're really looking at what's the incremental value per shackle that we're trying to fill at the plant. So things that impact mortality, that means we've got to go out and try to buy or find pigs to fill those shackles. Things that can increase the value or that may reduce the number of pigs that we get to the plant out of our own production really drives our profitability on a fixed asset basis. So we're always trying to account for that. And the beautiful thing and the thing that I've really appreciated about working in an integrated system is that we have the opportunity to model our costs and our performance impacts all the way from the sow farm through the packing plant and ultimately into what goes into the bag for our customer. And we continue to do more and more to understand the things that we do on the live side that impact pork quality and the impact we have with our sales group and our marketing group. We've actually got Roger Johnson's here somewhere. Roger, where are you? Raise your hand. Oh, he must be out talking. He don't want to hear me talk. So, but we recently hired Roger Johnson. Most of you guys would have known him from his time at Farmland or DeKalb in the past, but as another individual to help us continue to advance our branded label and what we're trying to do on the product quality side. So a brief question that many people pose to themselves, but how do businesses settle on process changes or evaluate investment opportunities? Money talks, right? Everybody's going to look at economic analysis and understand what they're doing. So really from an economic modeling standpoint, what folks have to do or what businesses have to do is establish their objective measures of financial success, and that can be different for many people. One of the beauties and the things that I actually learned with Wayne when I was doing consulting nutrition at NutriQuest, we worked with a lot of live producers. And a lot of those live producers looked at different metrics to determine their success as a business. Were they right or wrong? I would argue and say nobody was right or wrong, but they all had their own drivers that they tried to use to measure their financial success. You know, you think about it, if we were making widgets, you may have a group of widget producers that focus a lot of their attention on input minimization, or figuring out how do I reduce the cost of making my widgets so that I can enter a product in the marketplace at a lower cost to get more market share. You have other producers that may look at it and say, how do I maximize my output so that I have the widgets with the most bells and whistles to create or find a niche in the marketplace, or how do I chase the largest output to increase my revenue? And then you have mature businesses that really look at system optimization, or understanding and using both inputs and output processes to determine and ultimately decide what the best business plan is. And how do you define success? Well, we think about it in the swine industry. You know, some of us use third-party benchmarking. As companies, we go out and we look at similar companies that are the same in size, the same in structure, and determine how are we doing relative to them, potentially. You may look at a historic improvement within your own company. In 5 years, how do I drive feed efficiency to a point that I believe is a metric of acceptability? How do I change my mortality over time? How do I make my sow farms more productive? And then really understanding and determining what are short versus long-term goals. What do I want to do in 5 years, in 10 years? Where do I want to be on a path to success versus what do I need to have happen in the next 3 to 6 months? So again, projecting that timeline, are we talking about seasonal factors in the decisions that we're making? You know, a 3 to 6 month timeline? Are we looking at 1 to 3 year decision making? Are we looking at long-term decision making? You know, are we looking at what we think are potential market opportunities? You know, right now we're all sitting chomping at the bit to hoping this ASF issue in China starts to pay off with our ability to export pork. Everybody's at the floodgate hoping this thing opens. Has it opened yet? No. We were still standing at the gates 8 months ago when we first started really speculating on it, and it still hasn't opened yet. It's crazy how much tariffs and government things can impact markets. You know, are we looking at long-term investment decisions? What am I going to invest in today to hopefully make myself better in 10 years? And really determining, am I looking at a return on my investment, or am I looking at some type of internal rate of return? You know, as a company, what we do at Seaboard Foods, if we want capital investment dedicated to us, we have to put together justification and take it to our corporate group, because we're one of their 6 or 7 divisions. And just like us, those other divisions are also putting together their economic justification for why they need capital support. And so what we've got to do is show that we can provide a successful internal rate of return for their investment capital. So what I wanted to do is go through a couple of examples, first talking about a short-term seasonal type decision process that we would make from a nutrition standpoint with formulation, but pretty historically or reliably, we see a reduction in our average daily feed intake and finishing from about June until the end of September. Most of you guys involved in swine production see this reduction, and so our goal is to look at nutritional strategies that can help provide similar energy intake levels when we know the pig's total feed intake is dropping or reduced, whether it's because of seasonal heat patterns, if it's because of health statuses coming out of the sow farm, all those factors that drive it. So internally, we've got multiple data sets where we've actually looked at the value of adding fat into our diets. And, you know, just to give you an example, as we move from 1% added fat up to 4%, typically what we see is we will get about 1% increase in growth rate, moving from 1 to 3% added fat. In terms of feed efficiency, as we move, we will continue to see about 2% improvement in feed efficiency for every 1% added fat above that 3% maximum that we get on average daily gain. So just to go through some rough economics on what we've got put together here. So essentially, if I've got a fixed time system, which again, our Guymon system is really fixed time all year round, not just seasonally, but all year round. But if we have a fixed time of 126 days in phase, a starting weight of 42 pounds, a space cost of 11 cents a day, and a growth rate of 1.8, our ending weight with 1% added fat diets is around 269. As we increase it, we can increase our ending weights up to about 5-pound heavier pig at 3%. And if we look at our diet cost per pound, we range from about 9.8 cents a pound up to about 10.6 cents. And this is one of the things as we talk about the progression of economic analysis. If you just look at diet cost by itself, you would look at that and say, yeah, there's no way I'm feeding added fat diets. They're too damn expensive, right? But then you start to look at my cost per pound of gain, and you would come up with the same conclusion. But then you start to look at income over feed and facility cost. Now, on a live price, let's say a standardized live price of 57 cents a pound of carcass, you would actually make the conclusion that still it's not worth feeding added fat in this situation. So if we stopped based on the market price, we would still make the decision that it's not worth doing. But now if we can shift that point of revenue to cutout at roughly 20 cents a pound higher or 77 cents, now it actually makes economic sense for me to move to a higher added fat level up to 3% where I can continue to get additional weight on my pig, which is going to drive the added value on that shackle. So again, in this situation, just live producers would say, no, it's not worth adding fat. Taking it to a cutout, it can be. So there's times where I know I'll have people ask me, well, are you feeding high energy diets? Are you feeding added fat? I'll say, yep. Well, why the heck are you doing that? Well, that's why. That's why in a lot of cases. So that was an example of a seasonal piece. So if we want to look at a larger long-term investment decision, and I'm going to stick with evaluating and looking at a scenario for the Guymon region where we are very fixed time focused, look at two options of what would be the advantage of adding finishing space in Guymon to add 1 more week's worth of space to our finishing turn time, or looking at converting our system to wet-dry feeders where we know we can improve our growth rate with wet-dry feeders relative to the conventional dry feeders we have today. So for us, for our system, a week's worth of finishing space would be about 100,000 spaces. Again, these are rough numbers, so don't take anything away from them, but at a turnkey price of roughly $300 per pig space for greenfield construction, our capital investment to add a week's worth of space in Guymon would be about $30 million. And we would hope that that 7 days would give us roughly an additional 12.6 pounds of live weight, about 9.6 pounds of carcass weight. The one thing is, as we add more barns, we add more labor force that's needed. We add more trucks that we need to add and support systems. And then we would also increase our weekly feed demand of about 1,800 tons a week. On the wet-dry feeder side, if we went with that decision, we would be able to move our growth rate roughly just under 5%, so we could move it from about a 1.8 average daily gain to a 1.88. If you look at a fixed time basis, that would give us about 10 more pounds of live weight. And if you look at a total installation, again, kind of turnkey cost of $700 a feeder, with 1 feeder for 46 pig spaces, we'd have to replace about 50,000 feeders to observe all the value. And again, we would increase our feed tonnage by about 1,700 tons a week. And again, that's both of those increase in tons are because we're producing heavier weight animals, not because our feed efficiency is going to get worse. And a capital investment of $25 million. Now, well, if you just do the rough math, $50,000 times $700 is actually $35 million. But if you go through and you look at the relative value or depreciation on the feeders you have in your system, we'll typically replace feeders after about 8 years worth of use. So if you look at the incremental cost of replacing a feeder that is brand new or replaced within 1 year versus what it would cost us to replace that feeder that's worn out and you're going to replace anyway at 8 years of use, and you depreciate that cost over time, you get about a $25 million capital investment. So not a dramatic difference in, I mean, you're talking $5 million to either build 100 barns or replace all your wet-dry feeders. So if we look at the internal rate of return of both those potential comparisons, using some assumptions of we'll market about 5.2 million pigs in a year, space increase, adding that week's worth of space would increase carcass weight by 9.6 pounds. A wet-dry feeder would increase carcass weight by 7.6 pounds. And we assume a cash flow increase of 15 cents per pound of carcass weight. In the top example, we've got the week's worth of added space. We would capitalize that investment up front, and then we would slowly start to receive a return on our investment probably about 2 years after we actually start planning for the project, by the time we build the barns and get pigs placed. And so if you assume you're going to get roughly half of your return the first 2 years after you initiate planning, and then a consistent return in your time span after that, we would see that we'd have a net present value on those buildings of about $26 million, or a rate of return of 15.3%. And this is actually if you don't have to go find capital. If you've got to go take out a loan or incur some type of cost of capital, then you'd have to discount that. This is assuming that Mr. Bresky in Kansas City decides to fund it. And then on the bottom, at the converting the system to wet-dry feeders. Now, the one thing that's interesting is, yes, once you achieve your full value annually, it's actually less because I'm not producing as many pounds, but I can start to observe a return on my investment sooner. If I figure that within a year's time I can capitalize and get all of those feeder conversions done, I can capitalize on 1 turn of pigs in my first year and then all of my pigs after. That would give us a net present value of roughly $31 million, or a return of 17.1%. So again, 2 different ways to look at, or options that we could do to address the space short issue that we have in the Guymon region, with slightly different return rates for the investment. The other thing we could do, and again, these are things that we've legitimately discussed and talked about, but the other thing that we could do is, instead of capitalizing and replacing all of those feeders in 1 year, we can lengthen our time of replacement over the 8-year lifespan of the feeders in our system. And so we can actually reduce our cost of replacement to about $15 million, and that would essentially represent the cost to replace a worn-out feeder with either a conventional dry feeder versus installing a wet-dry feeder. And so we can lower our initial expense, but we don't get to fully receive the value of the system replacement, so our actual return on the investment is less over a 10-year projected timeline. But you need less capital, and you're doing it slower over time. So if something happens in year 5 and we want to turn it off, we can stop. But those are some legitimate options that are things that we've talked about or looked at in our system where we're very short of space. And then the question I always like to pose people when we start talking about economic analysis is, how do you project into the future? Most of us are probably going to do some combination of these things, but are you going to look at historic trends? Am I using my past 5-year history to project what I'm going to see in the future? Am I using some type of research result to make determinations on what my system impact is? Do I do some sensitivity analysis where I'm going to look at what happens if corn price goes from $3 a bushel to $8? And does anybody incorporate known changes in market conditions? I always give people a challenge on that because we've been talking about it for a long time now with ASF. We're waiting on these floodgates to open and they haven't yet. And I don't think anybody in this room 6-8 months ago would have projected it would take this long for those gates to open. And then some of the other questions that I routinely get for our systems, to pellet or not to pellet. So in our different systems in Guymon, for our mills there, kind of in that high plains region, we pellet all of our diets and all of our feed, versus Iowa, where today the only thing we pellet are starter diets. Really, the decision that we've made within those two regions, Guymon, historically, we've got a much higher corn basis in that region, less availability of byproduct ingredients. We use some distillers, but we've got to pay quite a premium to haul it there from the Midwest. Again, we've got scarce milling resources, so for us, improvements in feed efficiency are very valuable. And then the thing that I realized is that we really built a system on feeding pelleted feed. If you've ever built a system on feeding pelleted feed and then you try to run mash through it, it doesn't work. So the times that we've gone to mash, it's been very challenging from a flowability standpoint. Noel, I think you said it in that PIC podcast you did. Nutrient availability is incredibly important. If I can't get those nutrients in front of the pig, it's a waste of time. And then also our feeder design. So we've traditionally we have round feeders in finishing in the Guymon area, and it's the neatest thing. People never believe me when I tell them, but if you look at a conventional square feeder, pigs can sort poor quality pellets. They can sort the fines out, and you'll get a lot of feed wastage. In a round feeder, they just push it around the corner, and they have to eventually eat it. So we actually don't realize as much of an impact on poor pellet quality on feed efficiency as some other producers. Now in Iowa, we've got a lower corn basis, higher availability of byproducts. Again, more of the conventional dry feeders or wet dry feeders. And the other piece is that today, if we wanted to pellet diets in Iowa, our Iowa Falls feed mill, we would have to make pretty large capital investments to add a third pellet mill. We have the space for it, but we'd have to add the equipment to add a third pellet line that's not there today. And we've got a lot more toll milling options up there, obviously, than the Guymon region. So really, ultimately, what we've done is look at the value of growth rate and feed efficiency against mortality and manufacturing and formulation costs within our diet differences to really get to where we've decided that we'll continue to pellet diets in Guymon and continue to feed mash in Iowa. But as Gary Lewis would say, one of my mentors within Seaboard, we reserve the right to get smarter. So if these economic situations change, we will look at changing with them. So those are some of the decision-making things. What I wanted to do is also just briefly touch on, from a production nutrition standpoint, the things that I try to do every day within our system. And there's really 3 goals that I have every day, and they sound really simple, but sometimes they're not very easy. Number 1, make sure that all pigs have feed. We were just talking last night with Noel. This is the time of the year that our feed milling capacities get very, very pushed because of increases in feed intake. Most guys are running the highest inventories in finishing that you'll have all year. And so, number 1, all pigs have feed. Number 2, all pigs have the right feed. Okay, so making sure that I'm getting my lactation diet into the right bin at the sow farms, and I'm not putting gestation feed in there, or I'm not getting late finishing feed to my newly placed pigs. And then finally, defining what the right feed is. In our system, I'll be honest, and I've told people, I spend about 20% of my time on understanding what nutrient levels I should be feeding. I really spend a majority of my time focused on nutrition on are we executing and implementing the way we should be? If I think I've got 1% SID lysine in my finishing diet, is it really there? Is my mill getting it mixed properly? Am I getting it batched and included into the diet at the right rate? Am I managing my feed bins on site successfully? Am I pulling my slides right? Those are things that we typically have to continue to reinforce and work with our guys on to make sure that we can accomplish what we try to do. So some of the constraints that we deal with on the site and the barn level, bin sizes, I think we've got everything in our system from 6-ton bins to 24-ton bins. And anybody here would tell you, and I would tell you, I wish all of them had 24-ton bins. The more on-farm feed storage I could have, the better, but I don't have that. And so working with variation in bin sizes, single versus tandem bins, we've got finishing sites with single bin lines that we put feed on top of feed on top of feed in the same bin, and it's always a challenge to manage those and having the right people in place to manage those successfully versus a tandem bin system where I can empty a bin and I'm always rotating and executing on-farm management successfully. One thing a lot of people don't think about, and how do you account for your groups of pigs? We actually account based on airspace, but we may have feed lines that feed multiple groups of pigs. So how do you budget feed successfully across multiple groups when your accounting system's looking at airspace grouping? Some of those things. Pig flows, fill times, and then barn rooms and sizes. We've got some really small barns in Iowa that are 300 head, and we've got, and Noel's shaking his head, yeah, oh yeah. And we've got some that are 2,400 head barns. So again, quite a diverse offering. And then I think the one thing too is, are you growing through greenfield construction or acquisition? As we've transitioned and grown in the Iowa area where it's been more acquisition purchases, we see more variation versus if we build it ourselves and we build it the way we want. So here's an example of our finishing diet feed budget where we put our feed budgets back on pounds per head, and then we have our farm staff actually round it to the closest 3-ton increment to fit our truck compartment size. That's the one common denominator we have is truck compartment size. So that's typically how we budget our feed. Feed mill constraints that we've got to deal with every day across the feed mills we operate in. Grinding capacity and grinding system. We've got a combination of hammer mills and roller mills. Mixer size and batching times. Pellet mill throughput. Finished feed bin capacity. We actually have 2 of our bigger mills in Optima and Hugoton have less than half a day's worth of finished feed storage capacity. So they have to manage those mills to make feed to the orders they receive, not make feed to keep their finished feed bins full, which makes them a little less efficient in terms of their sequencing throughout the day. Truck compartment size we talked about. Flushing and sequencing procedures. And Cassie and Steve touched on it quite a bit today. Biosecurity guidelines. This is an area that we, just like everyone else, is really spending a lot of time understanding how can we modify processes to achieve better biosecurity and food safety without making it so cumbersome that we constrain ourselves from a throughput standpoint. Medication feeding directions and feeding periods, VFD validation and compliance, and then medication withdrawal times. So all fun things that make implementing a nutrition program always interesting and exciting. The other thing too, from an implementation standpoint, I would say that we do pretty routinely within our system is try to simplify our programs as much as we can. The thing that we truly believe in is that the simpler I can make it for the folks in the farm, the much more likely it's going to be executed properly. We have those guys that are worried about taking care of pigs, treating pigs, making sure they get pigs loaded, unloaded, cared for every day. The last thing I want to do is make it incredibly cumbersome on them from a feed program standpoint. So we see the value in keeping things simple, and then also working through effective communication and following our organizational charts. So I can go out and have a conversation with each of our sow farm managers, but after I get done talking to all 90 of them, I've spent 2 weeks of my time. So being able to work with our production management groups to relay it to our regional operations managers and down to our finishing nursery and sow farm staff is incredibly important to make sure we're using effective communication. So I'm not having individual conversations with every one of our sites. You know, a good example, our sow gestation feeding program, we're very simple. We feed 2 levels. So our first level is a base feeding, so all of our sows that are visually assessed as ideal or heavy condition, they receive 3.5 pounds of feed per day. Sows that are assessed as thin condition receive 6 pounds of feed a day, and we body condition our sows bi-weekly throughout gestation. So every other week, a breed group is being evaluated for body condition, and it's great as an evaluator because when I go into sow farms, I can see pretty quickly whether or not they're following our feeding program. So just briefly on summary of what I wanted to try to put together and kind of bring to the group today. Again, really as a system, we try to leverage our vertical integration to redefine our level of profitability. We can view the value of ultimately what we can make on the pork side, not just where we leave it as a carcass side. Really understanding and defining your economic indicators of success can establish boundaries for economic evaluation and decision making. And I tell people, everybody's different. Everybody looks at things in a different light. But so I'm not telling you what we do is right or wrong. You guys are probably arguing and saying it's not. That's fine. Everybody's entitled to their own evaluation and their own thought process. And then on the later piece, although the goals of a production nutritionist may sound simple, the complexity within a connected food system make it challenging. Having to deal with all of those constraints and ultimately getting all the feed you need in front of the pigs at the right time can be challenging. Then implementation and execution of a program are tougher than development of the program. I can sit in my office and plan all day, but the hard part's going out and getting it executed successfully. So, awesome. Well, with that, I'd be more than happy to take any questions, and I appreciate it, guys.
Yeah, we have some time here for some questions, so with that.
Yep. And so Noel's point, investment and really looking at a return on your investment. Some companies set it differently. Some will want a 2-to-1 or a 3-to-1 return on your investment. Give you the politically correct answer. I would tell you it depends. It depends on which metric we're looking at. Typically, though, we'd be looking at at least a 2-to-1 return on our investment before we would pursue it.
So, like on the fat exam, you got years and years of data.
Mm-hmm.
That's pretty predictable, right?
Yes, that's a very predictable response.
What about something that's maybe new? You've done limited trials. I mean, what's your thought process on it? I got the 3-to-1 return makes sense, but how do you assess the predictability of that outcome?
So. Noel's question, how do we determine the predictability or success of a new potential program or process? So the one thing that we have and we try to do from a research standpoint in our system is we typically evaluate a program or a product within our dedicated research facility. We'll evaluate it on roughly 4,000 head through those finishing barns. And then the next thing we do is we scale it up to a large evaluation where we'll put 100 barns on a treatment and try to replicate it across the diversity, the variation in our system, and get a lot of replication to really evaluate what's the value for us. So, but we try to use that research facility as our filter. So by the time we put the effort into spreading it out over 100 barns or through three different feed mills, and we want to make sure we feel like there's a confidence level in the value proposal. Did that answer your question? Dr. Henry?
Okay, I have an old man brain part here, but if you're measuring the temperature of your business success by a shackle space, isn't there another variable, which is the weight that hangs on each shackle space?
So that would, yeah.
Money by taking a 273 pound to a 320 pound pig?
So, yeah, Dr. Henry's question is the incremental value of increasing weight on the shackle. And that's exactly right. That's part of it. So that incremental value's driven, number one, by filling all the shackles, and then number two, by the incremental weight on the shackle. So if I can push a heavier pig on it, I can get more incremental value. Now that works to a certain extent. Then you really have to look on the sales side of what's my market opportunity, what are other players doing in the marketplace, because there is a point of saturation where heavier weight doesn't always mean greater product, which means you may run into some market issues, or you're getting discounts for what you're sending out the door. But yes, yeah, the weight piece is part of that incremental value on the shackle. And that's why the example of feeding fat, where we get an incremental increase in weight, which drives our value on that shackle. Yep. All right. Thanks, guys.